In today's video, I'm going to be showing a trade on the pound dollar 15-minute chart. To begin the analysis, we can see that we have a major flow from 0 to the high number 6. We can see a series of high highs and higher lows, and of course the buyers are progressively picking up the market from a higher point, and of course closing above the last high, rendering the previous low as a confirmed market structure, and that's how the uptrend is created. The point number 6, we have a reversal divergence, and the market starts to free fall in a new major flow, and price comes back to the major low 1. And when price came back to this region, of course we drew a supply demand zone in that area to project the probable zone where the buyers may be seated in this current situation. Since we're now talking about a major uptrend and a major downward move now colliding, there's a collision of flows, and of course there's a certain reaction that is expected from either market players. So now we have a group of sellers from number 6 running into a set of major buyers at the low number 1. Now in this case, we're supposed to have some sort of reaction from the buyers, and of course an underlying context would lead to a buy trade, and let me just show you how that happened. So in this case, we have a probable market edge here, and we can draw the Andrews pitchfork to be able to determine if this is actually a possible market edge. So we use these two prominent highs, major low, major, and a major high and a minor low on the inside, and then we actually modify this by bringing the midpoint of the AB axis, which is 5 to 6, and bringing that axis to the midpoint, and we can see that price action is actually caught very accurately using this tool. In other words, you can just draw a straight line between the A and B axis and then project where the midpoint is between that, and place your pitchfork A axis right to that midpoint. Now you can see that we're actually in a market edge, and at this instance we have a candlestick frequency tail showing in that buying region, of course confirming that we have buyers seated around in that region. Not only that, we can also see the pin bar, the bearish pin bar that's showing here, and price takes off higher after that. Moments later, we can see that we have price struggling to break that area, and the sellers kind of got frustrated. And of course, if you pay attention to the relative strength index and price action, you notice that price is creating lower lows, and the RSI just created a higher high. That is what we call reversal divergence. And in this case, we can see that the reversal divergence is happening in the new market edge that has been caught by the lower line of the pitchfork 2 and the supply demand zone. And in this case, we can now also draw a frequency line that is being derived from this area here to see if we're actually in another market edge. And by using this frequency line here, you can see that we're able to catch that exact moment, and we can see that these two lines intersected at a certain point, and after those two lines were retested in the midst of the retest, we can see that we had buyers reacting and the market starting to take off. And not only that, we can connect the major low 1 and future price projections, and you can see that we'll actually be in an accurate market edge. Or rather, if you connect the frequency of candlestick tails, you notice that we catch this market edge again. In this instance, we can also see that we have a hybrid bar, of course, there, and it is actually in a small divergence, and it is a hybrid bar with fractal qualities. This means that the momentum offset between this low and the RSI is out of sync and means that there's a smaller divergence on a lower time frame, and that's a way you can see a divergence on a lower time frame without actually switching time frames. So we can see that the intersection of different line work and the pitchfork tool has got a probable market edge, and the trigger for this trade was actually either this hybrid bar, but my entry was at this frequency of, let me just show you where my entry was and the logic behind my entry. So the logic behind my entry was actually the intersection of this candlestick frequency here and this upsloping frequency here, and the intersection was actually my buy limit order, and we can see that after that price decided to take off. So we can see how line work in alignment with the actual flows and context of the market can be able to pinpoint precisely reversal points in the market. And my stop loss is at 15 pips exactly below the hybrid bar, and my take profit is exactly almost 3 times or 4 times that near this major high, where there might possibly be a group of sellers ready to bring down the market. So in the meantime, the buyers can manage to take the market back up to this region, and then we might be looking at whether it's going to keep going up or anything. But this is just a simple day trade that I executed. Thank you and take care.